please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the big story this morning is Axis Bank, which has reported a quarterly loss for the first time ever since its listing. This is on the back of worsening asset quality. Abhishek Kothari is here with all the finer details of what took place, with Axis and the commentary as well.
Well, Ekta, good morning. So, the stress that has come in Axis Bank is largely from the known factors that they had already mentioned earlier. So, while we were indicating that 27,200 crore was the kind of stress pool in the balance sheet of Axis Bank, the major slippages, or 90% of the 16,536 crore of slippages, have come in from this stress portfolio of watchlist and lower rated profile book. Management has also mentioned that this is the front loading of NPAs that they have done in this quarter. So overall, the gross NPA in absolute value has increased by 37% on a sequential basis, while in percentage wise, gross NPA has increased to 6.8 versus 5.3 on a sequential basis. The non-NPA stress book has now reduced to about 12,200 crore from 27,200 crore that was there in the previous quarter. Overall, the restructured book has also declined to about 2,065 crore from around 7,000 crore in the previous quarter. So you look at the balance sheet growth, the deposits have grown by 11%, close to 11% on a sequential basis, but it's heartening to see that the low cost deposits share has increased to close to 54%. That has aided, along with advances growth being at 18% to net interest margin being sustained at 3.3%. Loan growth was largely led by retail and SME portfolio. You look at the key ratios, NIM is at 9-quarter low. However, credit cost is on the higher side due to front loading of NPAs. While loan growth is at multi-quarter high, the NIM is at multi-quarter low. So that's it from my end. I expect the stock to open a bit red in trade today.
Okay, all right, Abhishek. We'll keep an eye out on Axis Bank today. But on that note, let's hear out what Shikha Sharma, the MD and CEO of Axis Bank, had to say on the news of her stepping down.
Well, I think lots of things have gone well with the bank, and when I look back over the last 9 years, I've enjoyed being here, and I feel very proud of some of the stuff that we've done, the strengthening of capability across product, across customer, the faith that customers have put in us, which is why we continue to see market share gains in our retail business. I think the acquisition of Inam has got integrated very well, so we have a more balanced corporate book. I'm delighted about my last 9 years, and there's always a time for people to move on, and I thought it's time to move on.
Okay, so that is Shikha Sharma of Axis, but Reliance Industries is on our radar ahead of its Q4 numbers today. Sonia joins in to tell us more. Sonia.
Well, thanks a lot for that, Ekta. You know, this could be the first quarter when Reliance Industries reports a 10,000 crore quarterly profit. That is if the telecom business surprises positively. Now, as we know, Reliance has 3 businesses, Petchem, refining and the telecom business. The big growth driver this time around is expected to be the Petchem business. In that, Reliance, remember, has added capacity in the Petchem business over the last 1 year, and that will be fully commercialized in Q4. The refining business has also been stable. We are expecting gross refining margins of somewhere to the tune of $11.4 a barrel. That compares to $11.6 a barrel last quarter and around $11.3 a barrel same quarter last year. So on the refining business, we are expecting a premium of around $4.4 per barrel to the Singapore benchmark GRM. So keep that in mind. The EBIT is expected to fall marginally quarter on quarter, but it will be stable around that 5,900 to 6,000 odd crores. The gross refining margin trend will also come up for you. As I said, the last 2 quarters, it's been around 11.4 to 11.6. On the Petchem business, as I said, this will be the big growth driver. The Petchem business has been very strong. It's been in a solid uptrend, and the volumes have gone up substantially over the last many quarters. So this time, the Petchem volumes are expected at 4.5 million tons. This compares to 4.2 million tons last quarter and 4 million tons in the quarter before. All of this should help the Petchem EBIT rise by by almost 12% on a quarter-on-quarter basis. We're expecting a figure of 6,400 odd crores. Then we come to the telecom business, which was very interesting this quarter. What Jio did was they cut tariffs, and because of that, their ARPUs and the ARPUs of the industry went down. So we're expecting the average revenue per user to come down to almost 140 rupees. This compares to an average of 150 to 155 for the last 2 quarters. But this will be offset by higher subscriber additions that the company has seen. So the telecom subscribers have gone to 190 million in this quarter compared to an average of around 120 to 160 in the previous 3 quarters. Of course, there are other things to watch out for as well. The shale gas business performance, as we know, has been loss-making. That will continue. The retail business is very small, just about 10%, but the EBIT is expected to grow marginally. The key number to watch out for really is what comes out with the telecom business profits. Kotak is estimating the profits for the telecom business to come in at around 812 crores versus 500 crores last quarter. That could be the big swing factor in Reliance's numbers. Back to you.
All right, and I think we have the standard disclosure as well that should come up for you. Network 18 and TV18, the companies that operate CNBC TV18 are controlled by Independent Media Trust. That's of which Reliance Industries is the sole beneficiary. Okay, then it's a busy day for Sonia, though. We'll be watching out at the auto pack as well. We have Maruti that will be reporting its numbers. Sonia, what do we expect there?
Well, you know, Maruti, it's been another stable quarter for them. They've had some of their new product launches, the new Swift, the Baleno, Brezza, which has done very well. And all of that will lead to a volume growth of around 11.3%. Now, this will bring about a revenue growth of 15% for the company. We're expecting 20,000 crores or so. Now, the realizations are also expected to improve around 4% because of the better product mix. As I said, their higher priced products have done better this time. The Baleno, the Brezza, also the new Swift, and 50% of incremental volumes have come from higher priced products. So all of that will make sure that their margins go to 15.1% versus 13.9% same quarter last year. Realizations will also be higher because of 2 other reasons. One is that they had given some discounts in the December quarter. That has come to an end, so that will mean better realizations for them. Also, they took a price hike of 1% in the quarter gone by in the beginning of January, and that will reflect in better realizations as well. The only niggling worry is the currency impact, which was adverse this quarter, which would mean higher royalty provisions that the company would have to pay and higher raw material costs. So because of that, you could see a bit of, a flat to slightly lower margins quarter on quarter, but year on year, the numbers are looking quite good. Back to you.
Okay, all right, Sonia, thanks very much for that. Well, time for a short break now, but all eyes on Prime Minister Modi and Chinese President's meeting, informal meeting.
All right, then RBL Bank as well will be reporting its numbers today. Abhishek's back with us. He's going to tell us what to expect there. Abhishek.
Good morning, Nigel. So when you look at RBL Bank, the loan growth has been in the region of 35 to 40%. So loan growth above 35% will be positive. Over the last 5 quarters, if you see, the low-cost deposit accretion has been strong. Coupled with that, the loan growth momentum has also been fairly strong, which has been guiding the net interest margin improving in the last 5 quarters. So last quarter, the net interest margin was at 3.9%. Above 3.5% will be very positive. They saw a slight bit of hiccup in their asset quality in the previous quarter, but gross NPA has largely remained stable and under 1.6%. So any improvement in gross NPA will be positive, or gross NPA below 1.65% will be positive. Our polls suggest an NII growth of close to 43.5%, while net profit to grow at 33%.
Okay, all right. Well, you have a couple of other numbers that you're watching out for, Abhishek, Sriram.
Well, CV cycle has been on an uptrend, Ekta. So we saw with the number of Chola Mandalam how robust disbursement in CV portfolio has actually helped them in their loan growth. Expect a similar trend with Shriram Transport also, who is the major player in used CV vehicle financing and a market leader over there. The net interest margin above 7.4% will be positive. AM growth in double digits will be positive. Remember that, CV cycle has been robust. I mean, CV sales have been robust in Q4. provisions to be high, as this company is now migrating to 90 days par due recognition from their 120 days par due recognition that they had earlier, according to RBI norms. So gross NPA, which was close to 7.98% in the previous quarter, that can increase to about 8.5 or their levels. So our polls suggest an NII growth of close to 14%, while net profit to be up almost 150% owing to the lower base in the previous year.
Okay, all right, Abhishek, thanks so much for that. Well, all eyes will be on the informal meetings between PM Modi as well as the Chinese president in China. Now, both the leaders will today participate in the first of a series of meetings. In fact, there'll be a lot of meetings out there. There'll be a whole host of factors as well that will be discussed. So let's go across to the report that was filed earlier. This went off.
Well, there are several sticking points between India and China. Let's start with what is perceived as China's closeness to Pakistan and China acting for its all-weather friend at several forums. Let's start with Maulana Masood Azhar and his designation as a terrorist, a global terrorist by the United Nations, blocked by China. Secondly, India's bid for the NSG, the Elite Nuclear Suppliers Group, again blocked by China. In fact, the reason that they cited was that India is not a signatory to NPT, and if exception is to be made for India, then other countries like Pakistan should also be considered. The China-Pakistan economic corridor that passes through Pakistan-occupied Kashmir, this has been a concern for India. India has voiced its concern, saying that it violates the territorial integrity and sovereignty of the country. This was completely disregarded by China, despite the fact that China is extremely keen that India gets on the Belt and Road Initiative. In fact, what we understand from our sources is that this is a form now, these informal talks are a form now of persuasion that China is actually using on India so that it comes on board the Belt and Road Initiative, something it is finding very hard to make a success out of without India participating. Several projects with regards to Nepal, Myanmar, Bangladesh will not be as successful if India is not on board. In fact, one of my sources in China told me that at least for projects in Nepal, India is a big hurdle if it doesn't participate, because India cannot be avoided. So clearly, that is one factor. The other one remains China being cautious of the Quad between India, Japan, Australia, and the United States.
Well, let's get talking about the commodity currency space. Manisha joins in to give us an update on what she's tracking this morning. Manisha, hi.
Hi, morning. Thank you for that. Well, with the US dollar holding around those 3-month highs, there has been pressure on commodities, but the individual commodity fundamentals really seem to be playing up. Aluminum, after 3 days of decline, has started to move up again after Deripaska says that he is not going to relinquish hold of Rusal, and that brings in back the supply concerns, because that is exactly what the U.S. had been asking for, that if Oleg does leave Rusal and there is a change of management, then they would, exempt the company from sanctions, but that clearly isn't happening, and we have seen the surge come back in case of aluminum prices. In any case, there are concerns from alumina output from Brazil as well. And with the alumina prices trading at $800 per ton, there is margin getting narrowed as well. So the profitability is in question, and the markets really seem to be tackling with all of that. The strength also continues in case of the steel prices, where we are looking at inventories decline by 21% in this month itself, and that means the demand has been on the higher side, and we are looking at the steel prices continue to gain up. What also has seen strength come back has been the crude oil prices, holding above that $74 per barrel mark, as the markets do, tackle yet again with the Iran sanction concerns. U.S. has until 12th of May to take a decision on that, and it has been a lot of back and forth onto that issue, and that is what is bothering. Apart from that, if you look at the Venezuela output, that also has been declining, down 40% in last 2 years. European Union has been talking about putting further sanctions on Venezuela. So the major producing countries are seeing a bit of a concern from the Western that has been putting the prices on the higher side.
Okay, all right. Much for that. Well, let's hop across. I think Mangalam joins in now to run us through all the cues that are stacked up from the derivatives market. Mangalam.
Good morning, Nigel. So, we start the May series and the old adage, sell in May, go away. If that was to be applied to the May series of 15, 16 as well as 17, the last 3 May series, well, one may have gone wrong, because in the last 3 May series itself, the Nifty is on an average gained about 150 points, anywhere between 1.5% to 3% as well. So we'll watch out for how this one pans out. Given the rollovers, they've been higher at around that 72% mark. This compares with about 65, 69 in the April series as well as 62 in the March series as well. So we'll watch out for the rollovers. There has been more conviction, and this conviction has come with a higher weight. The Nifty starts May series with an open interest of close to 2.2 crore shares, and that's the highest that we've seen in at least the last 2 series, where we started off the series with sub 2 crore shares in open interest. The FIIs, which at the start of the previous series were at the lowest levels in terms of long exposure, they've gone back above that 50% mark. So we're seeing 54% longs being built up at the start of the series by the FIIs, and they have balanced it out with buying 75% long exposure in index puts, and they're playing the possible upside with 71% long exposure in index calls as well. So the markers, they've been placed at the 11,000 call at the top, which was very active in trade yesterday, as well as the 10,500 put, which perhaps should act as a bit of support, given the 10,500 put had the maximum open interest for most of April series as well. But the only concern is the fact that given the sort of events that we have, the Fed meet, the Karnataka elections, as well as monsoons and results, the wicks, the volatility is rather low at 12%. So we'll watch out for whether that goes higher and IVs go up or not.
Okay, all right, Mangalam, thanks so much for that. Well, on that note, we'll wrap up on Power Breakfast, but we'll leave you with the picks of our Bullseye contestants. Stay with us.
My first buy call is on First Source Solution. Maintain a stop of 59 for an upside target of 64. My second call is buy on Take Solutions. Maintain a stop of 210 for an upside target of 250. My third call is buy on Chambal Fertilizers. Maintain a stop of 198 for an upside target of 230. And my fourth call is buy on Shree Infra. Maintain a stop of 90.50 for an upside target of 97.
First call for today on the buy side is going to be HDFC Life, and long positions can be created in HDFC Life, keeping a stop loss of 518 for the target of 560. The next call is on the short side is Kajaria Ceramics, and short positions can be created on Kajaria Ceramics, keeping a stop loss of 564 for the target of 506. Another call on the short side is going to be Kestrel India, and short positions can be created in Kestrel India, keeping a stop loss of 200 on the futures, expecting a target of 178. And the final call is on the short side is Idea Futures, and one can short Idea Futures at CMP, keeping a stop loss of 70.50 and expecting a target of 63.10.
My first call is a buy call on Tata Global Beverages. Buy Tata Global Beverages, stop loss 281.50, target 303. My second call is a buy call on Samaria Consumer Limited. Buy Samaria Consumer Limited, stop loss 18, target 22. My third call is a buy call on IDFC. Buy IDFC, stop loss 53, target 60. My last call is a buy call on Netco Pharma. Buy Netco Pharma, stop loss 790, target 880.